Quantum computing stocks recently experienced significant declines following comments from Nvidia CEO Jensen Huang. During an analyst event, Huang stated that very useful quantum computers are likely 15 to 30 years away, suggesting that the technology won't be practically viable in the near term. These remarks led to sharp sell-offs in several quantum computing companies. IonQ stock fell by 39%. Rigetti Computing dropped by 45%. Quantum Computing Inc. decreased by 36%. D-Wave Quantum declined by 43%. Investors reacted to Huang's timeline by reassessing the short-term prospects of these companies, leading to the stock declines. However, some industry experts, such as Gil Luria from D.A. Davidson, argue that Huang's comments might be self-serving, suggesting that quantum computing could impact Nvidia's GPUs within 5 years. In response to Huang's statements, D-Wave Quantum's CEO, Alan Baratz, countered by highlighting that their quantum computing solutions are already addressing real-world problems, indicating that practical applications are currently underway. The differing opinions on the timeline for quantum computing's viability have introduced uncertainty, contributing to the recent volatility in quantum computing stocks.
The quantum computing stocks, they had a huge move higher. Jensen Huang from Nvidia comes out yesterday, makes comments saying that, some of the supercomputers are still, and the full, realization of supercomputers is still decades away, and you see all the stocks tumble. I know there's one that you like in your granny shots here. I believe it's IonQ. Just want to get your thoughts on what we've seen in some of these parts of the market and how to think about investing, if you should be investing, in some of these more speculative or futuristic frontier tech-like companies?
I think investors do need to put a long-term lens on a lot of these important mega themes. I think quantum computing is in the earliest days. I don't think anyone can judge really whether it's 15 years away or 15 months. And I think people have made many mistakes over the past 20 years looking at things like social media and underestimating the adoption rates there, or internet, or even AI now. I mean, just think about 2 years ago, how many people were saying AI was going to actually take far longer than expected. That being said, I do think the environment for stocks hasn't been great for the last 3 weeks. I think it's really gotten people into a recency bias, thinking, look, we've neared a top, or that stocks are just awful now. I think we're getting close to the point where, you should be betting really and leaning heavily against that. I mean, even look at AI sentiment, it's almost back to negative. But Morgan, regarding quantum specifically, it is a pretty innovative technology. I think these are going to be high volatile names. And so until we get back to risk on, they are going to be tougher names to own, but I don't think that means you have to sit them out in 2025.
Tom Lee, co-founder of Fundstrat Global Advisors, has been notably bullish on Nvidia, citing its leadership in artificial intelligence and its dominance in the GPU market as key drivers of long-term growth. While specific comments from Tom Lee about Nvidia's stock in 2025 are not currently available, his previous analyses provide insights into his perspective. Lee has consistently emphasized that Nvidia's position as the go-to provider of AI hardware and software solutions makes it a cornerstone of the AI revolution. This aligns with projections of sustained revenue growth in AI-driven industries. Lee often points out Nvidia's near monopoly in GPU technology and its critical role in powering AI applications, cloud computing, and advanced data analytics. Analysts aligned with Lee's optimism have suggested Nvidia could continue its upward trajectory, potentially reaching or exceeding a $4 trillion market cap by 2025, depending on AI adoption rates and new product releases.
That was Nvidia CEO Jensen Huang with his outlook on the quantum computing timeline. Shares of Nvidia actually rebounding slightly this morning after sliding more than 6% yesterday. By the way, what he said about quantum computing managed to take out a lot of those quantum computing stocks, some of the smaller ones like IonQ, quantum computing, Rigetti. Joining us right now for more on all of this is Joseph Moore. He's Morgan Stanley semiconductor analyst. And Joe, I just want to get your take on this. I've been reading a lot of stuff. I mean, after Jensen Huang made his comments the night before last, we actually saw shares a little higher in the morning. Maybe not by a lot, but it certainly wasn't giving back the pullback that we saw later in the day. There were a lot of the tech stocks and other big high flyers that pulled back, though, after we got stronger than expected jobs numbers, just in terms of what the BLS had in terms of jobs openings, those JOLTS numbers. That had people suspecting that maybe the Fed is going to be more reluctant to cut rates anytime soon, and that caused all of these big high flyers to pull back. So do you think the pullback in Nvidia shares yesterday was more related to what Jensen Huang did or didn't say, or just more related to the overall idea of watching the Federal Reserve and seeing how the economy is doing?
I mean, I think both of those play a role. I think there were also very high expectations around the keynote at CES. And, you know, CES is a trade show oriented around consumer and automotive. And there were some really important developments that came out of the keynote around those markets. But data center is 85% of the revenue. And I think, you know, there may have been expectations that people wanted to hear more about that. So I think you have some of those issues. But, you know, overall, this is still a company in a very strong product cycle. And data center wasn't the focus here. It's investor focused, but you know it's still very strong. So I think it's a combination of some of the market issues that you talked about, as well as maybe some expectations issues around the trade show. But there was really nothing negative to take away from it.
Practical quantum computing for widespread commercial use is still years away. Nvidia CEO Jensen Huang recently suggested that useful quantum computing is 15 to 30 years out, causing a recent dip in quantum stocks as investors recalibrated expectations. Many quantum startups are pre-revenue and heavily reliant on funding. Rising interest rates or funding constraints could hurt these companies' stock performance. Large tech players like IBM and Google dominate the field, making it harder for smaller companies to compete. The long-term outlook for quantum computing remains a promising sector for long-term investors, as breakthroughs could lead to exponential gains, but the stocks may continue to face challenges due to long development timelines and investor impatience for tangible results.
Yeah, what could he say in terms of the data center that the street would really like to hear? I know that the revenue is expected for the fiscal year that ends this month to come in at $113 billion, ramping all the way up to north of $200 billion by the fiscal year that ends in January of 2027. What do people want to hear on that front?
Well, you know, expectations are high. I think we're 2 months into the Blackwell cycle, the new products that they just started shipping. So I think to think that we were going to get any color on, you know, GB200 or incremental Blackwell products was probably just not going to happen. This wasn't the forum for that anyway. And I think so from a product standpoint, I think we know everything that we need to know. From a revenue standpoint, you're facing a little bit of a transition here, that you have Blackwell demand is very good. And you've heard these comments from Jensen in the past on CNBC talking about, you know, the level of Blackwell demand being insane. And he didn't really repeat those comments. But I think the issue that you're dealing with is Blackwell demand is really strong, but it's supply constrained. And Hopper, the sort of legacy product, still is the largest portion of that data center business. And so I think we'll still have a couple quarters here where there's meaningful upside, but I think the real upside is kind of into the back half of the year when you start getting that kind of full-blown Blackwell ramp. So I think, you know, people would like to hear that, and I think they did hear that in some sense, but I think, you know, they're trying to avoid those kind of really strong statements about Blackwell because it's not the main driver of the quarter. I think that's the combination of Blackwell and Hopper. So still quite optimistic about how this plays out, but I certainly see the upside being stronger in the second half of the year.